Legendary investor Warren Buffett has given us two important rules. Rule number one, never lose money. Rule number two, never forget the rule number one. So, this actually defines the most foundational concept in stock market investing, that is risk management. And I thought I'll talk to you about this subject today. Hello friends, I'm Vidhata. I have been blogging on financial topics for last 14 years and you are watching the grand new show Mind Your Money. So to begin with, let me ask you one question. Why do you think people lose money in stock markets? What's the most important basic factor that leads to people losing money in stocks? In my view, and I have observed this over all these years, that people lose money in stock markets when they buy stocks at unsustainably high prices. And this happens more so when they are not really attentive to what they are buying and they are rather ignorant about what's happening around them. Let me now give you one example, a very recent and latest one. You must have heard of what's happening to Adani Group companies nowadays, especially after Hindenburg Research released a notorious report making sensational claims on their operations and a substantial run-up in stock prices. But I want you to hold on for a moment, take a back seat, and look at the entire episode very holistically. Now, on your screen, you will see a table. Many Adani Group companies you can notice now between February 2020 and December 2022 have run up substantially. I mean, look at the returns. And mind you, these are not returns in percentage terms, these are returns number of times. So, a stock has gone up 10 times, 15 times, 20 times, 25 times. Look at Adani Transmission, Adani Green, Adani Enterprises, Adani Total Gas. So this has been the run up. And now the next slide will tell you what exactly happened to those group companies after Hindenburg released a research report. Look at this slide now. Stocks have crashed like pack of cards, but nonetheless, mind you, they are still up if you compare them with their February 2020 levels. So the whole point here I'm trying to make is, if you're late to join the party, you're the first one to pay the price. Please understand, when Hindenburg Research released a report, the stocks were standing this high and they just needed a gentle push for them to crumble under their own weight. And that's exactly what has happened to Adani Group companies. So here I'll leave you with three things. So the three key takeaways for this topic today is, number one, uncertainties plus unsustainably high stock prices plus ignorance is actually the recipe to disaster. You can expect maximum times you can lose money out there. Number two, you have to understand that Adani Group companies now will have a performance pressure. And just quickly, I'll add one more slide here. Look at how the ground level performance of Adani Enterprises has been over last 1 year. You can clearly see the revenues have shot up substantially, but what happened to their profits? Profits are not catching up simply because they are shelling out more money towards interest rates, towards interest payments, I beg your pardon, and they are also investing quite aggressively in their upcoming businesses. So this is the second key takeaway. If ground level performance of the company and stock market performance of the company, if these two things are not in sync, then stock market performance sooner or later will follow the grassroots level performance of a company. And third, how do you define whether the prices are really high or really low? Mind you, this is always in comparison to something, and that something is nothing but the true value of that company. Now you'll ask me how to find that out. Yeah, that's the puzzle that you need to solve as an investor. Next time I'm going to talk to you about that. Until then, mind your money.